Cashflow Diary Podcast, episode 25.
Congratulations, you showed up. Give yourself a high five in celebration of your success. Welcome to the Cashflow Diary, where new and experienced investors come to take confident action towards their goals. Your host is a family man, a real estate entrepreneur, investor, coach, and instructor. As a master facilitator of Robert Kiyosaki's Cashflow 101 game, he's inspired many to begin their journey into creating cash flow for themselves and their family. And now, here he is to offer you the tools required to earn the income desired. Your cash flow coach, Jay Massey.
Hello, everyone. Welcome back. Glad that you are here. And many of you, if you've looked at the title of the show, you know that I've got a special guest for us today. I know that I'm excited. Hopefully, you're excited. And I'm going to take a guess and say that he's going to be more excited than either one of us. Because if you've ever seen him on stage, you know that he is by far one of the most exciting people who can talk about what could be, I should say, a very dry subject. But in this particular case, we have with us today Mr. Tom Wheelwright. If you don't know who he is the creative force behind Provision. It's one of the world's premier strategic CPA firms. He gets the privilege of helping so many of us all across the U.S., all across the world even, for the past 30 years. And he's got a wealth of knowledge as it relates to taxes. And more importantly, I want you to understand this. I love the title of his new book. It's called Tax-Free Wealth. Now, first of all, tax-free just sounds good. Wealth sounds good. And then he's going to put the two together. And that's kind of why I invited him here, because I want him to share with you the information that you need to be able to take your cash flow, your balance sheet, your future to a completely new level and be able to get some of that tax-free wealth. So do me a favor, make sure that you are listening. Make sure you're taking some notes, because I promise you're going to hear something. You're going to like, I'm going to need to do that later. So welcome, Mr. Tom Wheelwright. Tom, how are you?
I'm great. It's great to be on the show, Jay, and really appreciate you having me. I mean, we've had some good times together on cruises and seminars and so forth, and it's always fun being with you, Jay.
Thank you. Yes, we did. And in fact, we met on the cruises, and I definitely look forward to keep going, because that's a quick way of saying that you're never done learning, and you never know who you're going to meet, and it doesn't really matter. So make sure that you're always out there looking for those events so that you can do it. So, Tom, tell us a little bit. I get a lot of questions that come in via email or on our phone line, etc. And one of the biggest questions I get from people who are trying to get started or thinking about getting started is, what on earth do I look for when it comes to a tax professional, and when do I engage them?
Yeah, that's a great question. That is actually the most common question I get as well. Which is fascinating when I'm traveling around the world. Whether I'm speaking with Robert Kiyosaki or the real estate guys or whoever. It's a really interesting question. The thing that people think is, and here's the misconception, that it's about what do they know, and it has. That's part of it, but what you're really concerned about is context. Okay, what's that CPA's context? Let me give you an example. Most CPAs and most attorneys, okay, we'll kind of put these two types of advisors together. They have the theory that their job is to protect you. Their job is to tell you what you can't do. Okay. Whereas it's my belief that when you get an advisor, I don't care what I can't do. I only care what I can do and how I can do it.
I see.
So, for example, somebody says, "Well, can I deduct this, or can I take this, get this tax benefit?" I say, "No, that's not the right question. The question is, how can I take this deduction? How can I take this tax benefit?" Because the reality is, as a general premise, the tax law is merely a series of incentives for business owners and investors. That's the first thing to understand about the tax law. It's just a series of incentives for business owners and investors. There's only one line in the tax law that actually raises taxes, and it says all income's taxable unless we say it isn't.
Okay.
And then all the rest of the law Literally 5,800 pages of the law is just instruction guide on how to reduce your taxes.
Okay.
Now, that's a context difference between the way we approach taxes and the rest of the world.
So you called, I found that interesting right there, and I hope everyone else heard that. You said the tax law is an incentive program.
That's exactly what it is. Think about what the government does. The government's primary job, as they see it when it comes to the economy, is improving the economy, right?
Sure.
Well, so because if you have an improved economy, you collect more taxes, you can provide more benefits, social benefits, defense, et cetera. Okay,
Right.
So what the government learned about 50, 60 years ago was that people hate paying taxes. I mean, it was a shocking development that they actually figured out that people hate paying taxes. And what they learned is if you give a small tax incentive, you can get a big benefit. So for example, one of the earliest ones was the investment tax credit. This is back in the 1960s. And they said, well, we'll give you a 10% credit for increasing your purchases of equipment. And if we give you this 10% credit, maybe you'll go out and buy equipment. Well, it worked really, really well. And so then they started looking at, well, wait a minute, we need people to invest in oil and gas. So but in oil and gas investing is risky. So what if we gave them incentive through a tax deduction to go invest in oil and gas? Well, guess what? It worked. So people were starting to invest in oil and gas, which is why we're supposed to, by 2030, we're supposed to be oil independent, okay, in the U.S. A lot of that, I believe, is due to the incentives for people to put their money into oil and gas that the government gives via tax deduction. Real estate's the same way. Okay, now business the same way. What you notice is there are no great tax incentives for investing in mutual funds. Okay, except for one. Now here's an interesting one.
Right.
There a lot of your listeners probably know somebody. We won't say that they actually do it themselves, but they probably know somebody who have put money into a 401k.
Right.
Why would you put money into 401k? The only reason you put it there in the first place was because you got the tax deduction. Okay, and so that's the incentive. So that's where the tax law is coming from. None of the tax law is not out there to penalize you. I mean, the IRS is out there to penalize you. Don't get me wrong. The IRS is not your friend. Okay, they're your enemy. But the Congress set up the tax law specifically to show you, look, if you do this, 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 and this, you will get tax benefits, and we want you to do these things. That's why my book's not called Loopholes. My book's called, because they're not loopholes. These are intentional tax benefits that Congress has put into the law in order to induce us or incentivize us to do certain things, to take certain actions, like investing in real estate, oil and gas, business, etc.
Got it. That makes perfect sense. And in fact, when I get the privilege of being in front of people, I try to boil what you just said down to 4 different categories and say that the incentives, if you will, or typically I'll say that the IRS will give you all your tax money back if you do one of 4 things. You know, it's either put money in food, produce food, produce energy, produce housing, or produce jobs.
There you go.
In a very general category sense. And that's the one thing that I think is funny is that we're not taught in high school or college or ever that the tax code is an incentive program. And here you are, you're the person who's supposed to be defending us, protecting us, and you're like, no, let's figure out how to use this code to our best advantage. How on earth did you just wake up one day and say, hey, I know, let's be a CPA and flip this thing on its head?
Yeah, you know, I've always been I'm like you. I'm a student, right? And what I learned early on, in fact, before I even graduated with my master's degree, was that what I love about taxes is the more you know, the more you realize you don't know.
Right.
Okay, so you always have to be learning. There's no way, nobody understands all of the Internal Revenue Code. Nobody understands everything, and there's always something new to learn. Plus, we have new law coming down every single day, literally in the form of court cases and rulings and so forth.
Wow.
So there's so much to learn. So I'm studying that. At the same time, about 10, 12 years ago, I got involved with Mr. Kiyosaki, and of course, he turns everything up on its head.
Right.
right? And so I'm starting to look at things a little differently, but I'd always looked at the tax laws. The reason I love studying the tax law is because I'm looking for how can I do what other people can't.
Yeah.
Okay. And coming back to your original question, how do you find a good tax advisor? It's really looking, again, at their context. What are they looking for from you? Let me give you a very simple thing to remember. If you want to change your tax, you have to change your facts.
Okay.
If you want to change your tax, you have to change your facts. Okay, and that's all you have to do. So if you've got an expense you want to deduct, it can be deductible if you change your facts. Okay, you can make it deductible. You just have to change your facts. And when you're looking for an advisor, what you're looking for is somebody who asks you about your facts and understands that if they understand your facts, they can help you with your tax. I can't help you reduce your taxes unless I understand your facts, so I'd better be asking you those questions. So Robert Kiyosaki asked me a couple of years ago, before I wrote my book, he said, Tom, in your book, would you list the top 10 questions to ask a tax advisor when you're interviewing them? And I said, yeah, I could do that, and I'm happy to do that. I said, but I don't think that's the best thing I can do. He says, well, what do you mean? I said, well, I think the best thing I can do is list the top 10 questions that your tax advisor should ask you.
Nice.
Because it's not about what questions you ask them, it's all about what questions they ask you. If you get good questions, you get good questions, you'll continue to get good questions. The challenge I hear all the time from people talking about their current tax advisor is that, well, they never call me, they don't talk to me, they only respond when I ask them a question. Well, that's because you set that was probably your original conversation, is you were asking the questions, they were giving the answer. So of course that's your relationship. Right. But if your initial situation was they asked you the questions and you gave them the answers, the reality is you have all the answers. Mm-hmm. It's up to your advisor to ask you the questions.
So spot on. And one of the things that I wanted to underscore about what he's sharing is the idea of the context and more importantly, how your advisor views the world will reflect or affect their ability to service you. And it's the same concept that I talked about before with you guys about investor identity. You want to make sure that if you are thinking like a buy and hold investor, you want to make sure that your advisors have the same frame of mind or context, if you will, as a buy and hold investor, because they're going to understand things. They're going to understand your situation differently. They're going to ask different questions, and you're going to get a different level of service, which is absolutely what you need in order to go out there and build wealth for the long term. So, this brings up an interesting question. I often get asked a lot, Jay, why don't you just go ahead and, you fix up the property? Why don't you just go ahead and sell it? Why do you keep it? Could you maybe share from your tax perspective why that is the case? Because the name of the show is CashFlowDiary for a reason.
Well, there's actually two ways. There's two ways to look at this. If you're fixing and flipping, you're not a real estate investor. You're a business owner, and your business is fixing and flipping. And if you want to be in business and you want your business to be fixing and flipping, great, go do it. Okay, but build it like a business. Don't treat it like an investment. Don't go be speculating like most investors do. Okay, I have no problem with that. I mean, I have clients that are professional flippers, and they're really good at it. Mm-hmm. But they treat it like a business. Okay, it's a real business. On the other hand, if you're looking for cash flow from the standpoint of an investment, well, now you're going to get these huge tax benefits. So from a tax standpoint, a business is taxed differently than an investment. Okay, your business, you're taxed as ordinary income. So, and if you don't structure it right, you could be and especially in California where you are, Jay, you could be taxed as high as 60% on that business income if you don't get some good tax advice. On the other hand, with real estate that you're investing in as long-term buy and hold, two things. If you're a good investor and have good tax advice, two things should happen. One is you should never ever pay tax on your cash flow. And the number two is you should never, ever pay tax on your capital gains.
Nice. That's exactly why hopefully people are able to understand that that's exactly what I hear. And that by hearing that should change or influence at least some of the things that you're doing in the marketplace. If you're looking for a specific benefit, you've got to, as Tom would say, change your facts in order to get that particular benefit. So if you've been fixing and flipping and thinking you're producing cash flow, you might want to rethink that situation and figure out how you can go, we'll call it to the other side, and be able to go out there and make things happen. So let me ask you this. The title is still intriguing to me because it's tax-free wealth. I know that nearly all of my friends, that especially the ones that aren't involved in real estate investing, hate April 15th, are always talking about, how much they pay and all this other stuff. How can you as a CPA have a book with the title tax-free? That doesn't sound right.
Well, in fact, it's just the opposite. If you're not tax-free, you probably don't have very much wealth. Okay, in order to build serious wealth, you have to do it tax-free. Let me give you a simple example, which I use in a class I teach for Rich Dad on a monthly basis. So I know these numbers really well. If you were to invest $10,000, and let's say that you invested at 10%. Let's say you were able to get a note at 10%, a 30-year note at 10%. Okay, if you paid tax on the income, just the income. Okay, and the income's reinvested, so we got compound interest going, and it's reinvested at 10%. If you paid tax at 40%, which is a really pretty average tax rate right now in the U.S., after 30 years, that $10,000 would grow to $60,000. You go, oh, that's not bad. Okay, however, if you paid no tax on the income from that $10,000, that $10,000 would grow to $200,000.
Wow.
So the difference between paying tax and not paying tax, the difference between $60,000 and $200,000. Well, now let's multiply that out a little bit. And what you'll see is that the biggest difference between those who make a lot of money and those who don't is how much tax they pay. That's the single biggest difference, because if you're paying a lot of tax, it's practically impossible to reach your dreams when you're paying a lot of tax. And it's not that difficult when you aren't paying tax. I mean, think about this. Let's say you had an extra $10,000 that you weren't paying in tax. Jay, you're a real estate investor. What can you do with $10,000?
A lot.
I mean, at a minimum, yes. You ought to be able to buy a $50,000 property, right?
At a minimum.
That cash flows at a minimum. Okay, that's real estate 101. Well, so that's like the government. If you get a $10,000 tax benefit, the government's giving you a free house.
Oh, wow.
That you own forever and ever.
I like the way you
And
said
then that house, think about this, that house then, let's say it goes up in value. Not only does it produce cash flow, it goes up in value. Now you refinance it, you go buy another house. Well, guess what? Not only are you getting to do that, but that house is going to provide tax benefits to you that will further reduce your taxes. This is why I say, and I'm dead serious about this. If you're a serious real estate investor and you invest on a regular and continuous basis, you should never ever pay tax on your cash flow from your real estate. So of course it's tax-free because you're doing what the government tells you to do. So it's tax-free, and it's really the only way to build serious wealth is to have tax-free money.
And that's exactly what I love about your perspective, is that you're on the other side helping us. It doesn't feel like you're against us, and you're one of those individuals who are out there to show us how that you're blazing that path and saying, hey, go this direction. Ladies and gentlemen, we are with Mr. Tom Wheelwright, author of the book Tax-Free Wealth. Hopefully you are getting a lot of great information out of this particular session. We will be right back, and we've got more to talk about. See you soon. Okay, you probably noticed that we jumped straight into the interview there. And yes, of course, I'm sure you were wondering, yes, the Learn Investing Now is still there. You can still go get your free ebook for learning how to do wholesaling. I've been hearing from some of you how you've been able to use the book and begin to start getting into contracts and deals, and that's exciting, knowing that you are actually following the information that's there. Also, wanted to make sure that we still got time, and I squeezed it in here for our cash quote for this particular episode. And I'll be quick about it because I'm sure you want to hear Tom. It's to be able to give away riches is mandatory if you wish to possess them. This is the only way that you'll truly be rich. That was said by none other than Muhammad Ali, also known as Cassius Marcellus Clay Jr. For those of you who don't know, he was an American former professional boxer, probably considered one of the greatest heavyweights in sports history. I know he was crowned Sportsman of the Century and by Sports Illustrated and Sports Personality of the Century because if you've ever heard him speak or say anything, you know he's got a unique perspective and he likes to share it. Anyway, with that quote, one of the things that I like about it is A, in order to give away riches, you must first attain them. But B, even once you have them, you're still willing to give them away. Think about that. That is, again, the only way that you will truly be rich. So let's also make sure that we get the cash flow question. If you remember last time, I said the following was the question. It's in Howard Gardner's book, and from the name of the book was Frames of Mind. It states a theory of multiple intelligences. The multiple intelligences in that book were musical, visual, verbal, logical, bodily, interpersonal, intrapersonal, naturalistic, and existential. Of these, there's one that's typically called the success intelligence. And what I was asking you to do is tell us which one you think is the success intelligence. And the answer is, of course, intrapersonal. And you could also think of intrapersonal as managing your own emotions, being able to manage and discipline yourself. When you have bad days, you still do the work. When you have great days, you still do the work. You may get upset, but you find creative and more positive ways to express it. Intrapersonal understanding is, well, it's very important. So as you begin to, master all the techniques as it relates to wholesaling or fixing and flipping or whatever it is you're doing, remember part of that is mastering your own emotions and the self, if you will. So this week's question, we'll make it a little bit easier. One word answer, simple question. Here we go. And if you were wondering why would people answer the question, it's simple. You of course you want a copy of my book that I'm in the process of finishing right now. I'm so excited because we actually got first drafts done. This is a process, but it's definitely filled with everything that I can possibly fit inside this book to be able to help you understand my entire business model, how you can go out there and duplicate it. Most importantly, if you want to learn to do deals with none of your own money or credit, learn to raise capital and then apartment buildings. This is kind of what I am attempting to do inside a book. Yeah, go figure, right? But you answering the question, get a signed copy, absolutely free, sent to you. So make sure if you send in an email and or call us at 800-689-1764, again, 800-689-1764, that you leave your name as well as an address, because it's impossible to send your free book to you if you have the correct answer. If you don't, give us your address. We can't email you a free book. It doesn't work that way. Anyway, here's this week's question. What is the science that describes the management, creation, and study of money, banking, credit, investments, assets, and liabilities called? I'll repeat that. What is the science that describes the management, creation, and study of money, banking, credit, investments, assets, and liabilities called? It's one word answer. That one word answer will get you a copy of the book. We are almost there, ready to release it, but we're still working on it. Anyway, go for it. If you want to check out some more details about the book, feel free to go to CashFlowCreationSystem.com. Now, that's enough of me. Let's get you back to Tom Wheelwright. All right, welcome back. Hopefully you were able to just get a new sheet of paper and get ready for the additional information that we're going to share with you now. Because as you can see, it's not just about you and your best ideas. And one of the strong things that I want to underscore for everybody here is you may be the best fix and flipper, best rehabber, best whatever out there on the planet. However, you need additional advisors along the way to help you build and construct and architect your wealth strategy, your business strategy, so that you have the ability to go out there. You can't keep your eye on all of the moving pieces by yourself and to that effect, you've got to find a way to find the advisors who have the ability to help you continue to reach your goals. So with us today, we have Mr. Tom Wheelwright. He gets the privilege of traveling around the world, educating thousands upon thousands of people about taxes. It's one of his most favorite subjects, even though you may not like it. And he gets to hang out with really, really awesome people like Mr. Robert Kiyosaki. Some of you may be familiar with him. And the author of Rich Dad, Poor Dad, and also known as the #1 personal finance author on the planet. But the point is, with that perspective, he's bringing to you a literally world worth of knowledge. So, Tom, we've got all kinds of things, going on, all kinds of changes in the tax code. We've got, everything is changing on a daily basis. What would you say to the person who's been a little bit more seasoned and is looking towards the future and trying to figure out, what am I going to do about in the next coming years? What can they do, about next year? What can they do right now if they're finding themselves in a situation they've been doing business for a little while and they're looking for some guidance, some help, and they're concerned about next year?
Well, I think the first thing they need to do, Jay, is they really need, everybody needs a tax strategy. And a strategy, my definition I use for strategy is it's just a simple plan of action intended to accomplish a specific purpose. In this case, our specific purpose is permanently reducing our taxes. And I want to emphasize that, first of all, is that I mentioned earlier that about 5,800 pages in the tax law is an instruction guide to reduce your taxes. Well, about 400 pages of that relates to 401ks and IRAs and pension plans and other types of deferring or postponing your taxes, which leaves about 5,400 pages of permanent tax benefits. The challenge is that most people focus on postponing their taxes to a later year. I guess that's because they're going to plan to retire poor. I don't know. I mean, I don't understand why you'd want to postpone it to a year where you're going to pay more taxes because you're going to be in a higher tax bracket. But in any case, you got 5,400 pages of tax law that's about permanently reducing your taxes. Well, in order to take advantage of that, you have to have a strategy. Okay? It doesn't take much strategy to say, let's max out our 401k, let's max out our profit sharing plan. There's no strategy in that. I'm just, that's the easy bucket, right?
Okay.
On the other hand, to permanently reduce your taxes, that takes some work. And what we find is with a typical client, we'll spend about 3 months with them. And in that time frame, we're able to develop a strategy that'll permanently reduce their taxes by 10 to 40%.
Wow.
So that means if they had a tax liability of $50,000, they reduce it by a third. Okay, so now they just have another $15,000 to $20,000 that they could go invest in real estate, right? So we're talking about a lot of money here when you're talking about a tax strategy. That's the most important thing, is to have that plan of action in place in order to reduce taxes in the long run. Because, for example, the number one thing you can do from a tax planning standpoint is to use the right entity. Okay, and an entity is something like a partnership or a corporation and a trust. Those are our entities. That's the way we hold our properties. That's the way we hold our assets in our businesses.
Right. But
well, about 50% of your tax benefits or your tax cost is going to come as a result of what entity you use. So that's a fundamental part of your tax strategy, is to develop the right entity. So the first thing I would suggest to anybody, particularly who's seasoned and they're going, I'm still paying too much tax, what do I do? Sit down with a tax advisor and develop a strategy. Develop a plan that will reduce your taxes right now and into the future for the rest of your life. And that's number one.
Nice. Now, if we can, for a second, let's be fair to some of the other asset classes, because yes, I've got a bias towards real estate. Are there any other asset classes or any other things and areas where the tax code does provide some benefit for those who are like, man, maybe they don't want real estate? Is there anything else out there that can help?
Oh my heavens. Any serious investor or business owner can get tremendous tax benefits. I don't even remember, Jay, on the cruise this year, we did a panel, right? And we had all the different types of investing. We had stock investing, we had gold and silver, we had business, and we had and we had real estate and different types of real estate. And then my job at the end was to come up and show, okay, so what are the tax benefits of each of these? Well, it's not a matter of what you invest in, it's how you invest. So you could get taxed on real estate at 40%, or you can get taxed at 0. You can get taxed on oil and gas at 40%, or you can actually get a negative tax rate. In other words, get a tax refund of up to 30% tax refund. Okay, stocks and bonds, I'll tell you what, stock trading is one of the easiest things to plan for from a tax standpoint. You can do that tax-free in an instant with a good tax strategy. Okay, so it doesn't matter what you're doing, it doesn't matter what you're investing in. The question is, it goes back to the strategy. How are you investing in that investment? How are you investing in business? How are you investing in, I get business owners, they come to me and just this last weekend I was in Houston, and they'll come to me and they'll say, well, so Tom, I'm paying like 60% tax. I'm going, well, tell me how you're formed, et cetera. I'm looking, of course you're paying 60% tax. You've actually done everything exactly wrong. Okay, so you're going to pay 60% tax. That's the type of thing we're going to meet for a couple of months, and we're going to be able to reduce that from 60% to 30% in a matter of a couple of months, simply by understanding how to set up the business properly. And that's what most people forget. They may look at it from a legal standpoint, they may look at it from a cash flow standpoint, but they forget to look at it from a tax standpoint. Like when we work with an asset protection attorney, like Mauricio Raoul, for example, with the real estate guys, or Garrett Sutton with Rich Dad, what we do is we're the architect. Okay, we're going to design this plan, and then you're going to have your attorney build it. Okay, here's just a word of caution, don't have your attorney building this plan. Your lawyers cannot do math. Okay, just understand, they can't do math, and it's all about math.
Right.
Okay, they can't do this. They can build the entity, they can actually set up the entity for you, but they can't design it the way it needs to be designed from a tax standpoint. So make sure you get your tax advisor to design it. Let your attorney build it.
Absolutely. Now I feel like I have to go and get some attorneys to come on and defend themselves. But absolutely, you've got to work with everybody. And if you're hearing it again, he just mentioned yet another team member. Remember, you could be that head coach, but you've got to have that other team member there as well. So when it comes to, so let's kind of expand this topic a little bit. When we start talking about stocks and gold and other assets, these are things that expand across the world. When you, in your practice, when you get the privilege of seeing so many different people, be that with Mr. Kiyosaki or the real estate guys or what have you, wherever you are, you get exposure to the tax code of the entire world. What would you say is primarily different or the same about the tax code internationally? And then most importantly, and this one's kind of like a for me type of question, because I'm starting to look at, as a U.S. citizen, placing some of my investments in international waters. What would you say are some of those first basic things that we should all be considering when we're beginning to look at the world as our investing playground?
Okay, so this is advanced tax planning now.
Yep.
Okay, first of all, the tax law from a context standpoint, in other words, the purpose of the tax law is essentially the same worldwide. Okay, all tax laws are incentives to business owners and investors. That's their primary goal, is incentives to business owners and investors. So it doesn't matter whether you're in Argentina or Mexico or Canada or Australia or China. If you want to reduce your taxes, you need to do what the government is telling you that they'd like you to do, which is primarily business and investing. Okay, so it's very similar from that standpoint. There are obviously technical differences from country to country. It's really interesting how close some countries are to the U.S. though. The United Kingdom, it's interesting. The United Kingdom, it's amazing how much Great Britain has patterned its tax law after the U.S. I mean, a lot of things are very, very similar. In Japan actually has named their employee savings plan a 401k. I mean, even though that's a specific provision in our law, and it's under Section 401k in our law, and it's not Section 401k in theirs, okay, they call it a 401k. So it's pretty amazing how
funny.
close the tax laws are. And there are great tax benefits in every country. I mean, in Australia, we have the superannuation, which there's some great tax planning you can do with that. That would be, comparable to our 401k. And in Canada, it's the RRSP, which is comparable to our IRA, only better, because you don't have penalties when you pull the money out. So there's great tax benefits in every single country. Now, when you talk about, all right, now I'm a U.S. citizen and I'm looking at investing worldwide. So here's a couple of things to remember. First of all, as a U.S. citizen, all of your income worldwide is taxable in the U.S.
Boo.
Okay? Yeah. Boo, hiss. Okay? U.S.
Okay.
is one of the only countries that's like that. Okay? Most European countries are not like that at all. If you invest outside, you don't pay tax on that income. Now, that said, there are ways to plan for that. So if you're looking at, you're going to make some serious money outside the U.S. and you plan to leave the money outside the U.S., okay, you're not going to bring it back in,
Okay.
then there's tax planning we can do to keep it outside the U.S. and never be taxed. That is advanced tax planning, and you better be sitting down with an international tax specialist who understands how to tax, not just a good context, but really understands the international tax laws. We have a whole division in our company that does nothing but international, and that's because we have so many. Because I travel so much, we have a lot of clients that are investing overseas, or we have a lot of clients from overseas who are investing in the U.S. So we have to have that as a major part of our company. But you really, there are things you can do. So don't think that just because the general rule is that you're taxed all over the world doesn't mean you have to be taxed all over the world.
Got it. So we mentioned the idea of, from the U.S. citizen perspective. So is there that equal penalty for other citizens when they're investing in the U.S. Or is it better for them? Do we make it easy for them to invest in the U.S.?
Well, we make it easy for them because they're only taxable on the income that they earn in the U.S. Okay, the U.S. tax law, ironically, is set up to penalize U.S. residents and U.S. companies, and to benefit foreign entities and foreign companies. It's a big issue. Paul Ryan in the last election actually brought it up, but it was a little too complex for, I think, the voters to understand. But Paul Ryan's actually the only politician I've ever heard that could explain it and understands it. That a lot of our challenges with shipping overseas and exporting versus importing is because of our tax law. Our tax law really penalizes U.S. companies. So, yeah, the people who are investing from overseas into the U.S., we make it easy.
Awesome. Of course. Now, if you've been listening any length of time to this particular episode, we've gone all over the map from the beginning all the way now. We're talking international, high-level tax stuff. If you are feeling like at this point, man, I just need a way to consume all of Tom's information in a very small little bit of a time, here's what I want you to do. I want you to go pick up his book, because I promise you'll learn even more, and you'll hear some of the same stuff, but hearing it twice will help make sure that you can remember it. More importantly, take action on it. Tom, as we get close to the end here, is there anything that you want to make sure that you communicate either about your book or about taxes as it relates to the person who's just getting started, the existing investor, how they can, prepare for, the looming changes next year, anything of that nature?
Well, a couple of things. First of all, good news is that Tax-Free Wealth, not only can you buy it in the bookstore and on Amazon to read, you can also buy the audio, and I read the audio version, so you can go and get the audio version as well. And it's also on Kindle, so so you can download it, you can get a hard copy, or you can get an audio version. That's the good news on the book, Tax-Free Wealth. It's been very popular. I mean, it's a bestseller. We hit top of the charts on Amazon the very first week.
Nice.
So that's very gratifying, and people, I get great positive comments about the book all the time. It was written to be very simple, so it's very simple. It's something that anybody, if you're just starting out, go read the book, because you'll understand it. It's conversational. It's actually a lot of the story of my life is in that book, And I wrote it the way I talk, and so it's as simple as possible. And we put everything in there. I mean, we didn't hold back. I mean, all our tax strategies are in there. So you can go on Amazon for $15 and get every tax strategy that we'd normally charge 10 grand for, and you can get it for $15.
Well, there's a discount.
So there's a discount for you. Okay. Here's what I tell the beginning investor. It's never too early to start, because do you start now, or do you wait until you've made some money? Well, if you wait until you've made some money, you pay tax on that money you didn't have to pay. So you're way better off starting early. Plus, it's actually cheaper from a professional fee standpoint to start earlier. So and you don't make the mistake. So absolutely get that tax strategy done as soon as you possibly can. Second of all, make sure you have a strategy for building your wealth. I mean, I know I'm a tax guy, and people look at me as a tax guy, but the reality is that the tax law is not just a series of incentives, an instruction guide for reducing taxes. It's actually an instruction guide for building wealth. So we use that with our clients, and we actually develop wealth strategies as well. And I think that if you have a good wealth strategy, a good plan of action for building wealth, then it's much easier to do your tax planning, much easier to plan your taxes and reduce your taxes if you know where you're going from a wealth standpoint. So I'd highly recommend those two things. And you know what? Just keep learning and find that right tax advisor. If you're interested in us, you can contact us at provisionwealth.com, provision wealth.com, provisionwealth.com, or you can call our office at 866-467-5809. So we're happy to help you, or if you need a referral even to another country, we can help you with that too. So however we can help, that's our mission in life, is making taxes fun, easy, and understandable, and helping people build tax-free wealth.
Fun, easy, and understandable. Stress on the understandable part. And that's absolutely amazing. I definitely want to say thanks for coming. Thanks for being here. And I'm just kind of curious. I know occasionally when you're speaking in an event, you have a strategy session of some kind that you make available. Would you be willing to make that same thing available for the people who are listening here?
I will do that for you, Jay. Absolutely. If you'll call our office at 866-467-5809, 866-467-5809. We're happy to do that consultation. We'll look at your prior year tax returns. We'll help you decide, what do you need to do next, and we'll spend half an hour with you, and no charge whatsoever. So we're happy to do that.
Awesome. Thank you. Ladies and gentlemen, we've had Mr. Tom Wheelwright here with us today, and hopefully you've seen that you've had a transformational experience. You now aren't looking at the tax code or April 15th or whatever that deadline is, no matter where it is that you live. You're not looking at that deadline as, oh my God, I got to pay taxes. And you saw or heard some strategies that could help you to not just not pay taxes, but actually solve problems. And that's one of the things that I love, is because if the government is out there trying to solve problems, they put where they want the problems to solve by telling us in the tax code, and then reading the tax code, you know what to go do, and you just go out there and you have the ability to solve problems of many different kinds. It has been a great time hanging out with you guys again. Again, thank you, Tom, for being here. We are definitely indebted to all of you who are out there and brave enough to read the tax code, understand it, and explain it to us so that we could go out there and use it. Thanks a lot for being here.
Thanks, Jay.
All right. Well, hopefully you were able to take some good notes. If not, listen again, and I'm sure you'll find one or two things. In fact, here's what I want to do, and I want to leave you with this. I want you to go back and listen to this again. Yes, I know we went a little longer than normal, but I want you to listen to it again. I want you to find 3 things that you can take action on immediately and get them done. Because just like Tom said, if you want to change your tax, you have to change your facts. And the only way facts are going to change is if you begin to take some sort of measurable, consistent action towards the things that it is that you want. And maybe that measurable, consistent action is, one of the free offers that you get as a CashFlowDiary.com listener. You get it. He just gave it to you. So maybe that's the action step. Maybe the action step is that you're actually going to listen to this again or share it with a friend or have your spouse listen to it. It doesn't really matter. I want you to think of 3 actionable steps that you can take and go get those done. And here's the challenge. I want you to do those 3 actionable steps before the next episode. Until next time.
Thank you for investing your time with Jay Massey and the Cash Flow Diary. When you have a moment, please visit iTunes and leave a positive comment about the show. And go now to our website, CashFlowDiary.com, to take advantage of our free business building course, Cash Flow Foundation. Gain the knowledge, understanding, and skill that will teach you how to never need a job again. Until next time.